In the metals quadrant, looking at a pullback in the July copper after rising for a fourth straight session yesterday. Copper pulled back with an outside range day today. An outside range day is when both the high and the low of the session exceed the high and the low of yesterday's session, which we had today. The high today was 4.6945, which was almost 0.3% higher than yesterday's settlement, and higher than yesterday's high of 4.6810. The low today, 4.5540, which is down 2.71% on the day and lower than yesterday's low of 4.5660, completed the outside range day. We also finished near the lows, which people who watch these patterns often call a key reversal, and they expect more downside. Copper is, however, coming up against strong support, so this pattern may not play out, especially with the Fed meeting tomorrow after being up 20.2% year to date, I should say. Today's sell-off drops copper to up 17.35% on the year, closing about 2.33% lower today. Chinese data that we got last night showed weakness in the manufacturing sector. China's NBS manufacturing PMI dropped in March. It was higher than expected, but still dropped to 50.4, just barely in expansion territory and lower than the last read of 50.8. So either way, it's gaining traction at a slower rate than it did last month. Not good for industrial metals. On top of that, rates are rising, led by the short end, strengthening the dollar. The two-year note is above 5%. And if it were to settle above 5%, it will be the first time since November of last year that happened. In the aggregate, the dollar is up over 0.5%, looking to close at the highest level since April 16th. Against the majors, I should say, the dollar is up 1.2% against the yen, 0.72% against the Canadian dollar, 0.5% against the British pound, and 0.46% against the euro. And a stronger dollar makes commodities more expensive on the global market. Therefore, it's often bearish for industrial metals. That includes copper.